Welcome back to the Closing Bell. Have private markets become an escape from reality? According to a new op-ed in the Financial Times, yes. With recession risks, sticky inflation, and rising debt among private firms, a bubble may soon burst. So joining us now is the author of that op-ed, Ruchir Sharma from Rockefeller International. Ruchir, thank you as always for joining us here. I guess maybe the first question is, if these private markets are a bubble right now, what then does cause them to burst?
Well, I think if you have a protracted downturn and this era of easy money has truly come to an end, which I believe it has, which is that the biggest beneficiaries, arguably, of this easy money era have been private investing, because a lot of these funds have taken on large amounts of debt. They've juiced up their returns on the back of that debt. And also that's where I think a lot of people today are hiding. I'm just shocked to know that you have some family offices, public funds, which today have a target allocation for private markets possibly higher than those of public markets. And the reason they're doing that is because they are living in the past and thinking that that's where the excess returns are. And also, I think, to avoid volatility, which is that because in private markets you don't have the daily P&L, they want to sort of think that they are taking a much less volatile option. And once, though, that adjusts properly, I feel that volatility in these assets will go up dramatically. So, yes, I do feel that the private markets are a bubble and are in the process of popping, triggered by the end of this easy money era and the persistence of possibly higher rates.
All right, so Ruchir, the liquidity issue, the rising rates are a big part of the story. I wonder how much of it is also investor psychology. For the longest time, folks wanted to get into private markets because there was the velvet rope mentality, right? They weren't allowed in. Everyone saw the returns from decades ago saying, I want a piece of that. Now I can get it. Do we think that there is still that appetite for that kind of private investment, especially when there is still that kind of gate up there for certain investors out there?
Oh, yeah, I think that many people are still seeking private investments. But as I write in the piece, that there's no good story which too much money can't spoil. So what began as a pretty sound idea, led by legends such as David Swensen at Yale University, where he sought to invest in private markets as a way of providing people with long-term capital to try and get long-term returns. When he was doing it, he was among the very few people doing it, among the pioneers to do it. Then he got great returns out of that. The problem is that in the last few years, you've had a rush of capital. So you have so much money chasing the few deals out there because everyone wants to get in, that there's a massive valuation premium on private investing now. And I think that that's where things have gone wrong.